East, I mean, we had a rough week, and luckily enough and happily enough, it ended up in a positive note. There has been a lot of volatility, and this volatility has been a result of a couple of things which I'm going to share with you now. So, first of all, on the American front, we had the unemployment number, which was not so good. Again, it was like 350, which is again in between the 364 and the 325. So basically the market kind of yawned at it. It wasn't something, a big market mover. The other numbers which are related to the economy is reasonably steady, pointing upwards, indicating that the dollar or the US economy is getting better. Yes, Khaled, thank you. I'm on Skype, so if anything, yeah, I would appreciate that very much. Okay, thank you very much. Yeah, please give me a heads up if anything on the chart comes down. Okay. Oh, I need to log on. Yeah, I'm logging on to the Skype. Thanks, Khaled, for the heads up. So, as I was saying, for the dollar, we had the issues with the economy. The numbers are okay. The economy is getting better. We also had the G20 meeting, and we also had the IMF meetings. The G20 meetings went smoothly, better than expected. And I say that because in the latest comments of Mr. Liu, who is the Secretary of I think Finance or Treasury, whatever it is, in the United States, in a way he did not admonish the Japanese so bluntly. He stated that the action that the Japanese are taking with regards to devaluating the Japanese currency was in line, or in a way, as long as it doesn't turn into a currency war, then it is kind of acceptable. There has been two very important Nobel Prize economists that I think his name is Mr. Fisher. He's one of the most respectable economic names today. He's not politicized or he's not politically aligned, so his remarks are taken with the objectivity that it should denote. He said that having Japan suffering for the last 20 years from deflation, what it's doing is good for the Japanese economy. It is not intended as a currency war, and therefore he asked the West or the rest of the G20 literally I'm sorry, I was talking to myself for the last 20 minutes. I am terribly sorry. Thanks, Ahmed. Okay, so let's start back again. Thanks, Ahmed. What I was saying, I hope you all had a good last week. We had a good week. It ended up on a positive note, and I also had a couple of nice testimonials from a couple of you guys that they really made some good money this week, and I thank you, and I'm very proud of you making this money. But just to take the the events of last week. There has been several events. Some events happened in the United States regarding the U.S. economy. Some things happened in Europe and some things in Japan, and we're going to take them all individually and see their effect on the markets and how we're going to see the next week. So with the dollar to start with, the major economic numbers were not negative, let's say, but it continued the upward trend in the US dollar, that it is, the economy is growing and things are moving in the right direction. The unemployment was around 350, and as I said, between 325 and 364, any number in between is kind of a number that the market would yawn at, would not really respond too strongly to. The other thing we had in the US, we had the G20 meeting, and we also had the IMF. And with that, the G20 did not really frown too hard on the Japanese and on the Japanese policies, because they stated that what Japan is doing within the internal policy or the domestic policy, trying to enhance or to stimulate the domestic economy. Also, the Secretary of State, I think his name is Liu, I can't remember the title, he's the Treasury Secretary in the United States, has actually came out and he very diplomatically admonished the aggressiveness of the Japanese policies, but he didn't get to the point where he's saying that it is a war, but he recognized that Japan is doing that for domestic, as a domestic stimulus. In addition to that, there is a remark that came out from Mr. Fisher, or Dr. Fisher. He's a Nobel Prize economist. He is a non-partisan, if you will. He is considered one of the objective, enlightened brains in the economic field, and he stated that what Japan is doing is the right path. It's been in deflation or suffering from a permanent deflation now for the last 20 years, and whatever it's doing to stimulate the economy, and the West should cut it some slack. That's pretty much the term he used. And with that, we can say that there is a non-aggressive or a adversity to the actions that Japan is taking to deflate or to depreciate its currency. It also had very good effects on the Japanese economy. Their exports have risen for the month of March by 1.5% or 1.4%, which is fantastic for them, and that the economy now has begun to actually turn towards a demand economy by stimulating demand. In addition to that, we have seen a drop in the gold, and the drop in the gold has been the result that the Japanese have now begun to sell the Japanese public, if you will, or the retail Japanese, have begun to take their money out of gold, actually selling their golds and trying to put their money in the Nikkei and into the stock or the equity market. That is, so we can say that the dollar is getting better, or the economy is getting better in the United States. We also had the events, the bombing in Boston, and that is pretty much what you see here, the drop off on the day in Boston, but the market is kind of turning around. In Europe, there are a lot of issues that are going on. There is the German parliament have passed the stimulus package, the $10 billion euro stimulus package for Cyprus. Italy is still in stagnation. They have re-elected their previous president, which would only indicate or show the trouble in Italy, the political stagnation, if you will, there. Nobody's agreeing on anything. They couldn't even agree on a new president. And by electing a president that hasn't really been too successful in choosing a new government or electing a new government, again shows you that the situation in Italy has not gotten any better. There are some trouble brewing up in Spain, in the Basque area, and also in addition, their unemployment there is rising, reaching about 24%. So there are some troubles in the European. The most important is that an independent rating agency has lowered, and that is one of the big effects that took place on the euro, as you can see here on the chart, has lowered the rating for Germany from A+ to A. And if that's the case, and this was because that Germany has undertaken a lot of obligations towards Cyprus, Greece, and all the other troubled nations in Europe, and these obligations, of course, are negative, if you will, to the German economy, and therefore the downgrade. And of course, as a result of the downgrade, you can see the slide in the euro. So with that, we discuss what's happening in the States, in Europe, and in Japan. Australia, the numbers were not particularly well, and the Australian dollar has been sliding. And as you can see here on the daily chart, the Australian is it is sitting pretty much at a significant point, and a break below that might lead to a further decline in the Aussie and in the New Zealand. With that, we are going to go now to the technical picture and see, having in mind what we have discussed. If you look at the US dollar, this was the events that took place. It came back down to the structure point, which is the 81.89, and it turned back with a vengeance. I mean, we had a very good momentum day over here, which is on the 17th, and on the 18th we had a stall, and now we broke above the big range day, which is a technically very strong signal, and we closed above the high of the big range day, closing it at 82.84. This is very strong, and we should be looking for the dollar to continue higher. Of course, this is our granddaddy of all structure points, and if the dollar does break above that point, which is 84.80, we can expect to have now a bull market in the US dollar. So with that, we're going to maintain our positive stance on the euro, on the dollar, and we can actually change that and make it 2 pluses, as the dollar seems to be quite strong. We're going to go now to the next one, which we have a definite trend in, which is the Japanese yen. And as you can see here, I'm just going to expand that. This is the Japanese yen on a weekly base. If you look at the weekly chart, you can see that this has now been quite a negative turn, and we should definitely remain short the yen, even though that maybe the Japanese government is not going to be stepping on the gas too much, but it's not putting the brakes either. And with that, people will be getting out of the yen and putting their money somewhere else. So with the yen, we are going to remain bearish, and this is the one currency that is in a definite trending mode and is pretty much a bear market. This is our new momentum low, and we should be looking for it to break, and that momentum low is 100, which is basically par, and that is a very significant point, and breaking below that should give us a momentum capitulation to the downside. So we need to be short the yen and to stay short the yen. Okay, so going back to our chart, we are going to keep the yen as very weak or bearish, and we want to be selling it. Okay, the next one we're going to look at is the Australian dollar, because it was in an uptrend, and this is as you can see, it's still trading at 102.35. It is close to the high, but it is now beginning to weaken, and this is because there is a cash outflow going out of Australia. There is some slight turmoil, but technically if it does break out these lows, then definitely we have to be shorting, because the last time it broke the 104, it took us all the way down to here, and this is several times breaking below the 103. You got once, twice, 3 times, 4 times. I mean, it has been making those attempts, feeble attempts to go higher, and therefore it is failing. So we'll be looking at the Aussie with a negative to neutral stance. So for the Aussie dollar, we are going to be negative to slightly neutral, simply because technically we have a sell signal, fundamentally we have still, it is paying some interest, so we have to be, but with a negative bias, we will be looking at, in a way, dealing with it on a negative stance. Now we come to the euro, and this is a special technical picture. This is a special technical picture. Why? Now if I compress the chart and you see it like that, we did break here twice. That is our structure point here. And above here we should have been in an upward trend. Well, we actually did fail. We come below the structure, we sold off, we came down to the other structure, and then here is now the situation we are in. And the situation we are in is, this is where I want you to look. And inside of that rectangle, you can see that there are two big range range days, one to the upside, testing the structure point or the significant point of 1320, then turning around and engulfing it back, giving us this very big reversal day, actually taking out the lows. This is technically a bearish signal, followed by the 2 days which is the market kind of, again, they're pretty much inside, but that area here is identified by a big momentum day to the upside, followed by a major reversal to the downside. We are still contained in that, but the tendency or the bias is to the downside. And we should be now negative, especially with the events that's happening, to slightly neutral. So for the euro, because of this, we are going to be negative to this was positive. We are going to reverse that. We're going to be negative to neutral with a negative. Okay, so we're going to be negative to slightly neutral on the euro. Okay. The next one we're going to look at is the Canadian, and the Canadian, similar to the not similar, I have explained to you before that the Canadian is in a technically a bear market. The trend has changed in the CAD the moment it broke the 98.94, it pulling back and retesting that structure point. That is a typical bear market stance, and its failure to go above the 98.94, that is quite bearish, and we should be looking to sell. This is a clear technical sell signal on the CAD. So we will be negative or looking to short the CAD. So this now is no longer going to be, this is going to be negative CAD. And of course the Swiss is going to be like the euro, but we will take a quick look at it. pretty much moves in tandem. But and as you can see, there is your big range and there is your big reversal. And the Swiss, the low of the big range is 107.14. Friday we went below, we tested the 107.03 and we closed at the 107.19. So that pretty much indicates the possibility of the euro to break to the downside. So we're going to be bearish on the Swiss and we're going to be bearish on the euro. Pretty much bearish, neutral, negative to, okay? So of course we will turn absolutely negative as soon as it breaks the lows. Okay, last but not least is the British pound. And what I have not said about the British pound is that the numbers that came out of Britain has been fairly abysmal, and I think there has been a downgrade also for the United Kingdom. And if you look at the chart from a technical stance, you would see that it is pretty much quite a bearish sign. This is a major sell signal right there. We're sitting at the 152.22 based upon the index. The number on the British pound is 152.28, and on the spot that is, and we actually did break below that. So with that, we are going to be negative on the pound. We'll be looking to be sellers of the British pound. So that is the British pound. So to wrap up what we are going to do, or what the plan for the week, we are going to be looking at, number one, buying the US dollar. That's number one. Number two, we are looking at selling the yen. So we're going to go long dollar yen, and we are going to pair it. Now we are going to pair it probably with the euro yen, probably with the Swiss yen. Sure. And when I get to this way, yeah, and we can anticipate that the Aussie yen and the CAD yen would be kind of weak, and the weakest of all would be the pound yen. If we can see, we will see that the pound yen would be the last of our yen choices. But basically, we need to be taking them in order: the dollar yen, the euro yen, the Swiss yen, then the Aussie yen, then the CAD yen, then the New Zealand. Last but not least would be the pound yen. We can also look at going long or going short the Aussie dollar, i.e. long the dollar. We can look at maybe shorting the euro Aussie. We can look at the pound Aussie or the euro CAD. So going long the euro Aussie, going long the euro CAD. The other ones are not, I mean, we will look at the structure points to see what the trades are with regards, because the pound is weak, the Aussie is weak, the CAD is weak. But at least now, having all the yen pairs, looking at the euro Aussie, looking at the euro CAD, and looking at the pound, which is again the weakest. We can also, there is an easy trade here, which is the euro pound. We can take the euro pound. or we can take the pound Swiss. So these are closely related trades. We can go long the euro pound or short the pound Swiss, whichever comes first. Let's look at the New Zealand while we're at it. The New Zealand dollar. As you can see, it's pretty much the same picture that we had in the Aussie. They move pretty much in tandem. So I would say that the New Zealand is weak, but it's not as weak as the Aussie. But we will also see how it pairs on the yen when we get to the yen pairs. Okay? So again, to summarize, this is what we're going to be doing. We're looking at taking the dollar pairs against the yen. We're looking at shorting the euro, the Aussie dollar. We're looking at shorting or going long basically shorting the Australian, so against the dollar, shorting the Australian against the euro. We can go long the euro pound and short the pound Swiss. And we can take a look and see what is happening with the CAD pairs. Okay? So with that, I'm going to stop the recording, save the recording, and